Well, I think of that in a few layers. So first, we think about the foundation. So investors need to think about answers to the question of how much returns they are looking to achieve, how much risk they are looking to undertake, and how much liquidity you need. And then the second layer is really more about the portfolio strategy, whether how they're accessing these vehicles, how fast or how slow do they want to pace their deployment into the private markets, as well as maybe the number of funds to get the right diversification. And right on top of that, then it's more about implementation, whether they have other considerations. I think these days, a lot of it that we hear from is about ESG, it's about energy transition. So how do they layer some of the restrictions as well as thematics in? And specific to Asia, I think Asia has more newer and younger allocators as well. And that is an advantage because a lot of times they have less legacy, less baggage, more of a clean slate. So they're able to consider these layers of considerations that I just mentioned and be able to start from the foundations or basics to build up their portfolio. And maybe last but not least, I think Asia still has a strong home bias. And given that the shape of what private equity scene is like in Asia, which is a little bit more tilted to VC and growth, I think there's a huge opportunity for investors to diversify into global, for global to complement Asia, and also for maybe a little bit more buyout orientated nature of the portfolios to complement what is a little bit VC and more growth leaning as well. I would say that maybe more strategically from an asset allocation perspective, private markets has actually outperformed public markets over the past 15 years and by quite a wide margin. So regardless of what's happening in public markets, for any investors that actually have a mid to long-term investment horizon, it would already make sense for them to consider incorporating private markets into their overall portfolio. But I think in more recent times, what we have seen is that obviously some of the key challenges are around increased stock-bond correlation. And for investors, they are looking for avenues to diversify their portfolio. They should consider all levers of diversification, including within private markets. So an example of that would be that private equity is a little bit more growthy as compared to MSCI World or S&P 500, and a little bit less concentrated on a few names. So that would form a good complement of diversification away from what is a traditional public equity portfolio. We have not seen or observed over allocation as being so prevalent here in this part of the world. But I would say that for investors, compared to about 20 years ago, investors now have more tools at their disposal to create more flexible portfolios. At the maybe more foundational level, I think it starts with investment governance. So LPs and their boards and the investment committees definitely should build in more flexibility in terms of their strategic asset allocation, particularly between public and private assets. But in terms of tools that are available to them, secondaries market has grown really quickly, and that really provides an additional avenue for liquidity for LPs seeking to create more liquidity in their portfolios across all private asset classes. And in addition to that, with the advent of evergreen private market funds, I think now investors have the ability or potential to be a little bit more flexible in dialing up and down their private markets allocations, at least at the margins. Yeah, I think the theme of Asia is that I think Asian investors, particularly private wealth investors, will embrace private markets in a big way and potentially even leapfrog the US. So what we have just mentioned, that Asian investors or allocators actually tended to be younger or newer allocators and have less of legacy portfolio, more of a blank slate. So in this instance, I think the big opportunity in front of them is really new vehicle structures such as evergreen private markets funds, because these actually solve a lot of problems that traditional closed-ended funds have had in the past. And I think for the Asian population, just as some Asia population has actually leapfrogged and skipped the PC for the smartphone, I think there's a chance that Asian investors are going to skip closed-ended funds and actually head straight to evergreen private market funds.